Welcome everyone to the Gold and Silver Club end of week review for the 30th of May 2014, presented by myself, Phil Carr, and Nick Housey at the Gold and Silver Club. Today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the commodities. So we'll be looking at gold, silver, oil, natural gas, coffee, amongst other commodities. We'll cover the top trades of the week. We'll be doing live market commentary and technical analysis, as well as looking at the week ahead. So the key events looking forward. And of course, we'll be answering any questions you may have on today's call as well. So gold price this week, again, lots of lucrative trading opportunities this week. We hope you caught some profits off some sell short opportunities we've had. We'll go into the top trades very shortly. The top news this week has been gold price hitting that 4-month low, and palladium has rallied to 2014 highs. So gold prices ended the US trading session at a 4-month low on Thursday as worries about the political friction in Eastern Europe subsided amid signs that the US economy continues to recover from a winter slowdown. Gold has hovered around $1,300 an ounce for much of the past month. So it's a simmering conflict between Russia and Ukraine stoked appetite for the safe haven in the wake of the weekend presidential election in Ukraine, as hopes that the new leadership could help resolve the current conflict has eased some demand for gold. We've seen a sell-off this week. So a feature in the marketplace recently has also been the falling US Treasury bond yields. Bond yields have fallen to the lowest level in almost a year, which indicates the gold market could potentially reach a bottom soon. Elsewhere in the markets, palladium has actually been the best performing precious metal this year. The persisting strikes in the world's largest producer of palladium, South Africa, since January the 23rd has continued to push prices higher, sending the precious metal to multi-year highs. So moving into next week, traders are definitely shifting their focus towards the US non-farm payroll report, which is scheduled for release on Friday, the 6th of June at 1:30 p.m. BST, 8:30 a.m. Eastern Daylight Time. I'm Phil Carr, professional trader, trainer and speaker. I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Housey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. So that is some background on the Gold and Silver Club. We'll take a look at gold price right now. Very interesting. We're hovering right around $1,251 an ounce. So we're pretty much finishing on the monthly lows here as we close into the week. And also we're finishing up the last trading day in May as well. So let's have a look at the top trades of the week before we go and have a look at the technicals as they're shaping up as we come into the close on Friday. The top trades of the week using the Gold and Silver Club signature trading strategies are as follows. First of all, we had a really nice opportunity to buy into natural gas midweek. We saw a breakout from a consolidation. Really nice trade on this, 210 points profit. The risk on the trade was 60 points, so $600 risk for each lot traded, and the reward on that was 210 points, so $100 profit for each lot traded. So for a nice 3-to-1 this week on natural gas. We also had a really nice opportunity to sell short gold earlier this week. So there's that pennant we discussed on last week's call. We were seeing the price just coiling up, building up pressure, and we finally got a breakout to the downside. You can see what a move that was, incredible move, and we caught a really nice chunk of that. Risk on the trade was 65 points, so $650 risk for each lot traded, for a profit of 190 points, so $1,900 profit for a nice 3-to-1 on that gold trade short. And we also had a really nice trade on coffee this week as well. That was just another sell short within the overall downward trend that we've been having on coffee. So that was a 95-point profit on that. The risk on the trade, 40 points risk, so $400 risk for each lot traded for a reward and profit of 95 points. So $950 profit for each lot for a 2-to-1. So those are the three top trades this week, one on gold, one on the softs, and also one on the energies. So with that, we'll take a look at the technical charts. We'll look at some live market technical analysis for you. I'll just bring up those charts. Okay, so the first market we are going to start off with is gold. So here we can see the lovely pennant formation that we had discussed last week, where the price had just been coiling up. We got this breakdown in price from 12.87 here. We came down, we broke through further support, and you can see we're actually sitting right at a key level of support at the moment, around the 1250 level, where we are right now. So all we're simply looking to do at the moment is break through that level in order to come back down to the next key support. So you can see we're getting a test of 1250 at the moment. If we can break through that, we should see a nice solid move down to the next key level below. So gold at the moment looking weak. We're closing on weekly lows here. You can see where we're just about finding some support, and we're looking at the moment to really come down and break through that level. This will be a point, a bit of an event area. We may get a reversal at this 1250 level, but if we can break below that, we should get a decent move, at least about a $10 move lower here. So we'll be keeping a close eye on gold today as we go into the close. Silver also looking weak. Silver broke down from that trend line, from that pennant formation as well. Had a really nice move lower. We can see over this week where we just come down, found a little bit of support at the low from the beginning of May, at around the 1880 level, where we had a bounce yesterday. However, we're continuing to sell off today. The US dollar index putting pressure on the precious metals once again, and we're starting to see gold and silver just reverse again and finishing more or less again at the weekly and monthly lows here as we go into the end of May. So really both gold and silver looking pretty weak here as we go into June. However, the real star performers this month and this year so far, palladium has been fantastic. We've just been continuing to climb out to high highs. We broke out again this week to 2014 highs on palladium. You can see where we've spiked up here, and we've just come up and hit 88.44.71, and we can see at the moment nice hammer developing on the daily. It looks like at the moment certainly we're going to just continue within this overall uptrend on palladium. We're just continuing to break out to new highs at the moment, particularly with the mining strikes in South Africa. We're seeing some just continued moves to the upside here. So we're looking good for potentially more breakouts as we go into June at the moment. Platinum had a little bit of a pullback earlier on this week. We did come down. We had a nice inverse hammer you can see on the chart there, and we've come down. We've reached some support at some major support levels this week. We've come down to around the 1460. We're seeing some support at the moment. We might be getting just a temporary pullback here before we resume the upward trend on platinum. We're certainly seeing some good momentum on both platinum and palladium. Another market which has had an outstanding 2014 is cocoa. In fact, if we go out, we'll really zoom out here. We're actually currently trading on cocoa at, well, certainly 2014 highs, and we're at roughly about 3-year highs here on the cocoa market. So we're continuing to break out to the upside. Cocoa's just been a great market for 2014. We've continued. May has been a very strong month for the cocoa market. We're above all the key moving averages. We've come up, broken through a weekly resistance level here as well, and we'll see how we go into next week, but we're looking into June as well. But May has just been a tremendous month for the cocoa market, and the trend has been our friend very much for this market. We'll take a look at some of the markets where we've seen a bit of a pullback over the month of May, which has been pretty profitable to take advantage of the overall downtrend. Those include wheat. So wheat is just been, you can see how well we're just staying within just below some key moving averages here as we've continued to sell off with wheat. It's been great just to take advantage of this overall downward trend. Just every time we've broken support, there's been an opportunity to sell. We've also had similar moves in corn. Corn has just provided us with a lot of sell short opportunities over the month of May. We're continuing to look a bit weak here. We really need to break out of this downward trending channel in order to see corn and wheat turn around here. So very interested to see how those are going to start to form into June. But at the moment, we continue to look at sell shorts. And we will keep an eye. We're starting to get a better form if we look out to one of the weekly chart. Overall, on the daily, we've been downward trend for most of May on coffee to take advantage of sell short opportunities on the coffee market, which have been very lucrative. And we'll also just take a look at the energies now as well. So both Brent actually breaking some support today. We may start to get a little bit of a further pullback as we go into June next week. We've just broken through the weekly lows at the moment, broke through a support level at 950. You can see we're just coming down to Fibonacci level at the moment, 109.32. So we're really looking to take advantage of a potential pullback here, especially if we can break through 109.32. We're looking to take this really back down to 109 and 108.76. So we'll be keeping an eye on that for the Brent market. And WTI, if we get a solid breakdown in Brent, we'll be looking to follow that through on WTI. We just need to take out the weekly lows here at 102.63 in order to get a larger move to the downside. So we'll certainly be looking out for that in Brent and WTI, looking for just a close and a break below some support levels in order to trigger some sell shorts. And finally, we'll just take a look also at, we'll actually just bear with me. We'll bring out natural gas. We'll just bring out as the last chart. We'll just take a look at. Okay, super. So natural gas was the last one we wanted to cover. Okay, what we want to note on natural gas, what we've certainly seen over the last week or so, is that we did get a big pullback yesterday on natural gas storage inventories. We had a very nice consolidation, got a very quick pullback actually to a weekly level of support here. So you can just about see it on the chart here. We've got a dotted line here representing a level of support. So we are in the futures contract at the moment. So the data, you can't quite go back to the historical data here at the moment, but you will get the picture here if I put it on the 4 hour especially. So this is yesterday, right? This is the storage inventories from yesterday. We had a nice consolidation. We broke lower, came down to a major area of support on the storage inventories before very quickly reversing, and overall we've come back down to a key level of support, just bouncing off some moving averages at the moment. If we look on the historical chart for natural gas, we're actually looking to break out of some key levels of resistance as we go into June. You'll see there's been a lot of consolidation at a very key level of resistance as we go into June, particularly on the monthly chart. So take a look at that. We're looking to get some breakouts as we go into June here. Nice pullback that we got after the natural gas inventories yesterday, but if we can just get a breakout as we go into the month of June above the really monthly highs from May, we should really start to pick up some momentum to the upside. So to finish off here, just wrap up the technical analysis, we'll just take it out to a bird's eye view and we'll just discuss what we're looking at. So gold at the moment, we're really looking to take out this weekly support around 1250. Silver's looking weak here as we close into the week, and I'd like to see us take out 1876, the weekly low, as we go into next week. Palladium is still looking strong here. Platinum getting a bit of a pullback, but we may well see this maintain the upward trend as we go into June. Wheat, coffee and corn all looking, coffee looking the strongest actually out of those markets. We might be due a reversal as we go into June, but wheat and corn still looking weak here. We're seeing a bit of a sell-off this afternoon on WTI and Brent crude oil. We'll see if we get major breaks of the weekly lows here, particularly with WTI, but Brent looks it's already broken the weekly lows. We're looking to take out major support at 109.32, and cocoa just having a fantastic run here to the upside, so we'll see if we get a continuation of that as we go into June. So with that, let's have a look at some of the major news announcements as we go into next week. Okay, so the major news announcements we want to look out for. We've got on Monday the 2nd of June at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we've got the US ISM Manufacturing PMI. So the Institute of Supply Management, the ISM Non-Manufacturing Purchasing Managers Index, reports on the overall economic condition of the non-manufacturing sector, including business activity, new orders, employment and supply delivery. So A higher than expected reading should really be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar, which will inversely affect gold and silver, of course. Next Tuesday, 3rd of June, we've got the Chinese HSB manufacturing PMI. That is at 2:25 BST, 9:45 p.m. EST. That data provides the overall view of the manufacturing sector and really acts as a leading indicator for the whole economy. So when the PMI is below 50, indicates manufacturing is declining, and a value above 50 indicates expansion. So China is a big buyer of gold, silver, copper, and oil. A stronger than expected number should be taken as positive for the markets and energies, and a lower than expected number should be taken as negative. Next Wednesday, the 4th of June, we have the 1:15 p.m. BST and 8:15 a.m. Eastern Time ADP non-farm employment change. That's the news that comes out prior to non-farm payroll. That report measures the monthly change in non-farm private employment. So the release 2 days ahead of government data, it's a good predictor of the non-farm payroll report. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then next Wednesday, the 4th of June, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report those levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, and a lower than expected reading should be taken as bullish. That's at Wednesday, the 4th of June, 3:30 p.m. BST, 10:30 a.m. Eastern Time. That's a very highly lucrative trade opportunity on oil every week, which is scheduled in the calendar. Next Thursday, the 5th of June, we've got US natural gas storage. So very similar in that the Energy Information Administration provide nat gas storage report. Again, very tradable, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. That's at 3:30 p.m. BST, 10:30 a.m. Eastern Time. A higher than expected reading should be taken as bearish for natural gas, and a lower than expected reading should be taken as bullish. And then next Friday, the 6th of June at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we've got the US non-farm payrolls. So the non-farm payroll, they measure the change in the number of people employed during the previous month. Excluding the farming industry, job creation is, of course, the foremost indicator of consumer spending. It accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Inversely affects gold and silver. That will be one of the biggest, actually the biggest high impact news announcements next week. So do join us for next week's call as well. Okay, so just for a quick recap there for you for the top announcements of next week, we've got Monday ISM manufacturing PMI, Tuesday Chinese HSB manufacturing PMI, Wednesday ADP non-farm employment change, Wednesday US crude oil inventories, Thursday US natural gas storage, and Friday US non-farm payroll. So if you do want to jot those down, those are the major news announcements next week which will affect the commodities markets. And of course, if you would like to learn how to trade commodities with the Gold and Silver Club, you can find out more about our courses that are available at our international training centers and online as well. So you can find out more about our upcoming commodities training very simply. To request information on the Gold and Silver Club coaching programs and live trading room, you can go to either www.jointhegoldensilverclub.com, or you can contact us at one of our offices, the Hong Kong, Budapest, Johannesburg, New York, or London office. Very simply, numbers on the screen there for you. So whichever one is closest to you, do get in contact, and we can arrange a course for you. So with that, also take advantage of our newsletter at www.TheGoldAndSilverClub.com. You'll see free weekly report on the precious metals, on energies and agriculture, as well as live market and prices to analysis and prices to really give you a heads up for the week ahead. Okay, so do take advantage of that. It's free to you. Right, so with that, guys, that is pretty much a wrap for today's webinar. So there is quite a lot for us to look at as we go into next week. So I wish you good luck with your trading today and into next week. We'll definitely catch you for a pre-non-farm payroll call next week as well. And yeah, have a great weekend. If you want any information on anything, do give us a call on the numbers on the screen. Okay, everyone, have a great weekend, and we'll see you on the next one. Cheers. Bye-bye.